D Street opens with a gap-up start on the back of the India-Pakistan ceasefire and the US trade deal with China. Key indices are up between 2 to around 3%.
Pharma stocks trade lower on fears of tariff hikes, and the US President Donald Trump plans to sign an executive order to reduce prescription and pharmaceutical drug prices sold in the United States.
Yes Bank is higher in trade on the back of a deal announcement with Japan's Sumitomo Banking Corporation. SMBC signed a definitive agreement to acquire 20% stake in the bank.
Defense stocks see profit booking after India and Pakistan come to a ceasefire agreement over the weekend.
And travel and tourism stocks, they rally after India and Pakistan tensions slowly de-escalate and as airports across northern border reopen. Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel. With me is Mangalam. And as we speak, well, the markets that's green on the screen, we're putting behind us the recent skirmish that we had on the border between India as well as Pakistan. Remember, earlier, the markets have chosen to look ahead with regard to the trade tariffs as well. And now it seems, things are clearing out. So it explains why the Nifty at the high point of the day, no big profit taking is what we have seen. And the Nifty Bank, that's the one that pulled back 4.5%. Well, that's the one that's leading the way in today's trading session at 1,500 points higher. Mangalam, what a beautiful looking screen.
What a beautiful looking screen if you're a bull. Above all key levels. The Nifty Bank sustaining well above that 55,000 mark. The Nifty above the previous week's high of 24,589 as well. And the question is whether we see short covering as we move towards the end of trade as well, because the FIs had been building longs and on Friday added some short positions, unwound some long positions as well. So all of that provides further fuel for an up move. The good part is the big decline that we're seeing on the India VIX, Nigel. Tensions have eased. The India VIX down almost 18%. And the broader market is doing a lot better. We have 14 stocks advancing for every stock which is declining. Let's talk about individual stocks then. We have Triveni Turbine. The company joins in now as they've reported a mixed set of numbers in the fourth quarter. The margins did improve, beat analyst expectations, but revenues and net profit missed estimates. Nikhil Sawhney, who's the vice chair and CMD of the company, joins in to discuss this quarter gone by in more detail. Thanks a lot, Nikhil, for joining in. The fourth quarter, the quarter as it were, if you could give us a sense of how you're seeing this year pan out. What's your prognosis on revenue, volume, and margin growth in FY26?
Well, firstly, a very good morning to you. Thank you for having me on. The FY25 and the Q4 that just finished was actually a record quarter, the 17th record quarter for Triveni Turbine. Not only have we achieved the highest turnover of any quarter, the highest profitability of any quarter, but the overall growth of order book as well has been very robust. We had over a 21% increase in revenue for the year, over 33% increase in revenue for in profit after tax for the year as well. But at the same time, we had an over 26% increase in our order booking. As a company that operates in the engineer-to-order capital goods space, we work off an order book which gives us visibility into the revenue in the coming quarters. And given the fact that we are starting the year with not only a record opening order book, but the fact that we actually had a very strong growth in order booking in the previous financial year gives us good visibility into the growth for the coming year. More than that, we operate with an inquiry book, and the inquiry book has been quite resilient as well, which gives us visibility into future quarters and future years' growth in terms of revenue. The margins, of course, are dependent on the revenue mix, which is dependent on the percentage of aftermarket as a percentage of sales versus the product itself, as well as where the products are being sold between the domestic market and international. And all of these factors have actually contributed quite well to the margin level of the company, as well as the visibility in terms of profit growth.
All right. Hi, Nikhil. Good morning. Nigel on this side. Good to see you on the show. Thanks a lot for joining in. Well, the market likes your numbers, but they would definitely like to know more about the future. So as you said, aftermarket services, they constitute a particular percentage of the mix. How much is it? If you could tell us that, point number one. And you ended FY25 with margins around that 21-22% odd. Scope for improvement from here?
Yes, the PBT margins were somewhere in the region of about 21, 22%. Our tax for this year rate was a little bit higher because we had certain losses in our US subsidiary, so therefore the margins and the entire profitability is a testament to the underlying strength that Triveni Turbine has, regardless of the investments that we are making in terms of opening up newer markets. So given that fact, aftermarkets as a percentage of sales lies somewhere in the region of about 33 odd percent. And we are quite comfortable with it lying at that number. The reason is that we need to live with our customers for an extended period of time. Our products last anywhere between 25 to 40 years with customers. And so therefore, the ability for us to be fair with customers, not oversell and not overreach in terms of charging more is also quite important.
Right. So if you could give us a sense then, you said that your order book is strong, your inquiry book is strong as well. The last few years have been extremely strong. You crossed the 2,000 crore milestone on the top line this year as well. So you've been doing well. I mean, if I just compound your revenue over the last 3 years, it's been growing at a CAGR of over 35%. The question is that now with the base having increased, with all the levers that you have in place, do you see a 20% plus sort of revenue growth in FY26 as well? And what's your ideal proportion of exports and domestic and ideal proportion of aftermarkets and, pre-markets?
Okay. Well, firstly, the fact is, as I told you in my opening remarks, that our order book has grown by over 26%. And so therefore, that gives you an indication as to the growth forecast that we have for the coming year, which is more ambitious than the number that you laid out. So having said that, and given the fact that these are orders that we need to execute to ensure that we have a high degree of customer satisfaction, this is something that we are working towards in all earnest. Now, having said that, what is driving this growth is a mixture of new product introductions, new market segments that we've entered into, and ultimately investing far more into research and development. As a company that actually has a limited amount of capital employed, we are a much more research-focused organization in the mechanical equipment space. Asset turnover is somewhere in the region of about 6, and that gives you an idea as to how our return on capital comes somewhere in the region of about 45%. If I strip out cash from our balance sheet, our return on invested capital without cash would be somewhere in the region of over 200%. And given that fact, our focus is on people. Our focus is on developing products and solutions which are unique not only to the Indian market and the peculiarities of our customers here, but to ensure that we can be globally relevant. And so going forward, exports is a very important part of our growth strategy, to be able to be closer to our customers, but also to be able to cater to their requirements. Triveni Turbine operates in the space of industrial heat and power solutions. And as you may know, about 50% of end energy consumption globally is in the form of heating and cooling. And so for us to be able to capture a market share in the industrial heating and cooling space is incredibly important for us to be able to provide relevant solutions. We also did enter a new segment in this current quarter, which was, I would say, more than a developmental project, but a testament to our research and development. We sold a project to NTPC with our Italian collaborators on an energy storage system, which was based on a carbon dioxide-based turbine and a carbon dioxide-based subcritical cycle loop. We believe that innovations like this, which we will continue to do further off, will expand the market breadth and the reach that we have as a company to be more relevant in a space where ultimately solutions are required in a variety of different manners. As you know, and you cover energy in a variety of different ways as a channel. To have an alternative to chemical storage, which is through thermal storage for batteries, is extremely important. And we believe as costs can come to parity with lithium ion, this will provide our customers with a variety of choices. And especially when you look at it from the perspective of long duration energy storage, these are solutions which will be very relevant for the market.
Okay, all right. Nikhil, give us a few more details. You like him or hate him, you can't ignore President Trump, right? Exports is a large part of your business. Could you tell us how much of it goes to United States? And because of the geopolitical tensions currently, is that posing a bit of a risk or is it an opportunity?
Well, firstly, the thing is that there's a degree of uncertainty in the market, and that is never good for predictability of orders. But having said that, Triveni Turbine, it has a localized presence in Houston in the United States. And so to that extent, we cater to the United States through our domestic subsidiary. We had hoped for the domestic subsidiary to be able to cater to the Americas, but we believe that at this current point in time, given the uncertainty, we would cater to it from India itself. I think that the bigger issue is the uncertainty around the Green New Deal in America, which was a large investment coming through a variety of different programs in the Biden administration, including the Inflation Reduction Act and the CHIPS Act, etc. And the uncertainty given that the Green New Deal has been extracted from the current administration's mandate brings up a little more uncertainty. But having said that, companies themselves are extremely keen to continue their path of decarbonization and achieving their climate goals. Having said that, a new market has opened it up to us in the recent past, which is the small modular reactor market, for us to provide heating solutions and power solutions for that. And we already have orders in the current quarter for that market, and we believe that will present a unique position for Triveni Turbine in the United States as well.
All right, final question before we let you go. Almost 1,000 crores of cash on your books. What's the plan here? You have return something to shareholders, buy some companies, or maybe that famed 6 times asset turnover ratio, use this to get to a potential revenue of 6,000 crores?
Oh, well, very frankly, we have an investor call later today, and I'm sure some investors will ask the same question. But we have a stated dividend policy to return in excess of 30% of our profit to shareholders. And I believe at this current year, our proposal is in excess of 35%. We believe some cash in hand is a good thing to have. Not only do we have liabilities in terms of our customer advances, which form a part of our cash in hand, but we are quite resilient with the amount of cash that we have. To your second question, in terms of inorganic acquisitions, we don't have any current plans, and we don't think that it suits our company's, what I would say, balance sheet metrics, both in terms of return on capital and return on equity, for us to pursue an active acquisitive strategy.
All right, take that point. Thank you so much for joining in. We saved your investors one question in the conference call, and I'm sure they have tuned into this interview to get an insight into what lies ahead for Triveni Turbines as well. The street likes it. It's a good mood for the street. And on your numbers, it's up nearly double digit for the stock. With that, we'll get you some more ideas for profit coming in from our colleagues at Money Control Pro. Khushbu Rai Gupta joins in with the stock. Khushbu.
In today's idea for profit, we have Repco Home Finance. Repco is a South-based housing finance company which has seen subpar growth in the last 1 year. As a result, its stock has derated significantly. However, there are triggers that can help the valuation. While the asset quality issue in the past has dented the growth, the resilient business model of Repco has helped the company to survive stiff competition amid regulatory challenges. The company will now shift its focus towards growing the home loan portfolio, which saw muted growth in the past. The business model upgradation by the management will also boost the quality and the growth of the business. Repco also enjoys strong pricing power, which has allowed the company to maintain stable margins and above average return ratios. Repco's ROA has remained above 3% consistently over the past quarters. We feel that the stock should command higher valuation due to the healthy profitability matrix and benign credit cost, which is contingent on the company's ability to generate higher loan growth on a sustainable basis.
Right, Khushbu, thanks a lot for that. With that, we'll slip into a short break. On the other side, we have another management who's joining in. Arun Jain, who's Chairman and Managing Director of Intellect Design Arena, joins in to discuss their quarter gone by. Welcome back. You're watching us here on Chartbusters on CNBC-TV18. If you look at, a couple of these stocks in the market, you have Dr. Reddy's. That post numbers has seen a big up move. In fact, actually up 5% off lows, opened mildly in the red and now has surged to the high point as well. But Nigel, we do have a management.
Well, that's right. Let's focus on Intellect Design Arena. The company posted a super quarter, and after a while actually, because the last couple of quarters were a little bit subdued. However, quarter 4 was the star. To help us out with what's the way ahead, we're joined by Mr. Arun Jain, the Chairman and Managing Director of Intellect Design Arena. Hi, Mr. Jain. Good morning. Thanks a lot for joining in. Well, congratulations. Rocking quarter, it seems. But what's the way ahead? Quarter 2, quarter 3, there were some delays. Quarter 4, you returned back in solid form. FY26, what kind of a revenue growth should we work with?
We don't give guidance with the basis of this kind of a change which happens every time. But we are saying that our strategy of eMACH.ai going to Europe and America is working very well because of a lot of legacy technologies they are sitting on. And eMACH is a kind of a disruptive technology in banking space. using first principle thinking and zero-based design. That is where the traction is building it up, which I mentioned during my last conversation with you and last quarter conversation with you, that since our strategy has moved towards larger size projects and larger, there was a delay on the quarter one, quarter two, where we first quarter revenue was as low as 550 crore, moving to 750 crore was a completely new.
Mr. Jain, let me come in, sir. Mr. Jain, let me come in, sir. The last year, though quarter four was blockbuster, for the year you ended flattish. Give us a simple number. This year, what should we work with, sir?
Yeah, the design for the organization is same. Is around 15% growth we are looking for in a year on year. The whole is just driven by new markets, is driven by new products. So this time, Intellect AI, which is the third unit, GTB and Intellect AI is coming up, which is driving the growth for the coming years. So GTB will drive wholesale banking growth, GCB will drive consumer banking growth, and AI will drive my AI growth in the region where we announced one of the largest AI deal of more than 200 crore in this quarter, out of which significant revenue is backward loaded, but still that is a proof of the pudding that what AI we are delivering is a business impact AI.
All right, so we take that business impact AI, 15% revenue growth is what you're looking at. And you've already stated a 300 basis points margin improvement for this year, targeting towards that 25% mark itself. I just wanted to know about the new products itself. There's Purple Fabric and the eMAC.ai platform. Over the next 3 or 4 years, how big do you expect them to be? What is the current order booking or deal searching that you're doing in these platforms?
Purple Fabric, today I'd like to share with the investor. Fortunately, we are on the same day when we launched this platform in Financial Times in competition to major enterprise AI platform like Palantir, C3.ai. It's the first business impact AI platform we launched today morning in London as a full platform. It has got a 4 major technology stack: enterprise knowledge garden, enterprise digital experts, which is disruptive over agentic technology, enterprise governance, and enterprise LLM optimization hub. Now, these 4 technology stacks are the first of its kind to create an open business impact AI platform. And this platform is open, like OpenAI was more on foundation model. This open business impact AI, where you can reimagine customers, reimagine products, reimagine operations, reimagine compliances as a single ERP of AI for any enterprise. So this market, what you're asking the question in the next 5 years, we are believing should be 5,000 crore market on AI alone. So that's what last time I spoke in December, that it could be 1,000 crore to 5,000 crore. But in the last 4 months, we built up our strategy of open business impact AI platform and being aggressive in a UK market. And believe it that all of it is investment which is coming in, is a part of my 30% margin for the last quarter, all embedded into that.
Mr. Jain,
extends out so much investment from Purple Fabric,
Mr.
which
Jain,
requires huge amount of investment, which is a
Mr.
bundle
Jain,
in a part of the.
Yeah, Mr. Jain, just to come in here, sir, that 5,000 crores is the total opportunity size, right? Is what you're talking about?
No. 5,000 crore is for Intellect, not the opportunity size. The opportunity size for AI would be 500,000 crore. AI is going to be.
No, for you. So you're saying that your AI revenue will move to 5,000 crores. Is that correct?
That's right, in 5 years.
By when? In 5 years.
And what would your overall revenues be in the next 5 years, given the large share will come from AI? Last year, you did about 2,500 crores on the top line. So if you're looking at just 5,000 crores coming in from AI, I'm sure the other businesses will also be there. You're looking at $1 billion company over the next 5 years. Is that a possibility or a little more than that?
Yeah, that's what we're designing the company for. The luck will favor us. We will fight the large battles. So 1,000 crore to 5,000 crore is a AI business revenue, whether it is 5,000 crore or it will be 3,000 crore. But the window of opportunity is 5,000 crore for Intellect AI revenue. So that's the one important point we are excited about. And okay. It will come at a very hefty margin because it's driven by the technology space.
Okay, so your margins have been, in this vicinity of around 19 to around 21.5% over the last 3 years or so. But you have hinted in the past that margin improvement is something that's on your radar. So for the coming year, where do you see margin improvement? And given that you have ambitious plans, with regard to AI, which will show up in terms of big revenues, what's the goal in terms of margins? Where do they head?
The margins we all believed in can head towards 30% operating margins is a very, very standard for product companies. We are reinvesting. Our margin in banking business is close to 33% on the banking products. If I take out AI separately, that margins are 33% as of today, which can go up to 35 to 36% on banking alone. AI will require more investment. In coming quarters, we have said 100 crore will be investing in AI in this year. So that is where the margin will come to 25% that we are looking at.
All right, and final question before we let you go. How should one look at the deal wins for you? In the fourth quarter, you did have some landmark deals. Average deal size increased, but the number of deals decreased to a near 8-quarter low. They were sub-double digit. They were at 9 itself. So going forward, should we look at lower number of deals at a higher average price, or should we look at higher deals and the average price increasing as well? How should one look at it?
Yeah, our focus is large deals. Will be there, around 9 to 10 deals, large deals, but it will link to the additional deals which will come in our journey of AI. So AI will have a large number of deals will come. We may categorize them separately, otherwise it will have the different metrics from the AI deals.
Okay, all right. All right, Mr. Jain, appreciate you joining in. For the time being, the street likes what you're saying. As we speak, the stock has moved to the high point of the day. And this is post the big rally that we've seen in the last 1 month or so. So as we speak, stock at the high point of the day. Mr. Jain, after a couple of weak quarters, you delivered a solid performance. We're going to hold you to all these numbers for the coming quarters and the years ahead. Thanks a lot.
Don't hold me to quarters, hold me to years. So please.
We will hold you to years.
Sir. We remember
you can
numbers.
Trust us, yes.
Yeah, very, very closely. And we appreciate you joining in. Wishing you all the best. Thanks a lot for joining in. Time to slip into a short break. Come back, continue to focus on markets and on stock-specific action. Well, let's focus on one segment of the market that's a little under the weather. That's the pharma stocks. Ekta joins in to tell us exactly why. Ekta?
Thanks for that. Well, yes, President Trump has tweeted that he plans to sign an executive order Monday morning, which is going to be focused on prescription as well as pharmaceutical drug prices being reduced. Prices could reduce as much as around 30 to 80% and almost immediately. And they will look to institute a most favored nations policy, where US will pay the same price as the nation that pays the lowest price anywhere. So the impact is that is likely to be aimed at innovative and branded drugs. Generic drugs could probably see a fallout of this policy. Experts say that one needs to see how the policy really is structured, and the industry is watching for likely tariffs being imposed on pharmaceutical imports as well. That is the larger picture, but in the near term at least, what exactly does this policy constitute of? Is it just going to be limited to Medicare and Medicaid, where the volumes might be limited for Indian generic companies? Then maybe the impact would be lesser. So one would really need to see the finer details of it. But nonetheless, stocks such as Sun Pharma are lower in today's trading session because they have a specialty portfolio with branded drugs as well. So the street is probably fearing that the impact could be greater for a company like that, which doesn't only have pure generic drugs at play.
Take that point, Ekta. Thanks a lot for that. Just keep an eye out on a couple of stocks before we wrap up on this edition of Chartbusters. I'd pull up Swiggy. It's up nearly 6% from the lows. Opened lower. The EBITDA and the net losses for the company in the fourth quarter widened because of the investments that they had done in the quick commerce segment. But two things really stood out from what the company reported and what the management said. The management said that food delivery business, they gained market share. And secondly, quick commerce, peak of the investments is behind them. So maybe going forward, contribution margins will improve for them. But over and above that, there are two other reasons as well. One is that the stock is down 50% from its highs already. So a large part of that could have been factored in. They are gaining market share, but more importantly, we are also looking at a good market sentiment in today's trading session. So dips are being bought into, and that's reflecting in Swiggy. That stock up 4%. Take a short break. Come back. On the other side, we have the team of Trading Hour taking all the market action forward. That's it from Nigel and me on this edition of Chartbusters.